Hey guys, Zaman
and Christina
from Our Rich Journey. Today's video is a special update because for the past year, Christina and I have been investing in this portfolio and we have taken you guys along on that journey. If you recall, in March of 2020, we created this portfolio and we did it to actually show you how everyday investors can invest in the stock market for financial independence. And we did it during March of 2020 because we felt like there were so many lessons that could be learned by starting to invest then and continuing to invest until today. And so in this video, what we want to do is not only share the performance of our portfolio over this past year, which was a tremendous year, but to also talk to you about our thought process behind the investments we made.
So for those of you that are new to this series, we began investing in this portfolio in March of 2020. We invested $5,000 into this portfolio, and every month after that, we invested another $1,200. And each month we opened up our account and talked about different investment topics, and we shared the performance of our portfolio. So if you haven't seen the first video in this series, or if you're interested in looking at all of the videos in this series, because we also talk about different investment topics in each different video, make sure you check out the playlist in the link below. So like we said, we are giving a 1-year update on our portfolio, but before we do that, I really want to focus on the beginning of our portfolio, when we created it, because it was in March of 2020 when there was a huge crash in the market. When we created this portfolio and we shared it with all of you, so many people had very strong opinions about our portfolio. People thought we were crazy that we were investing at that time. People thought that the market was going to bottom out, that we were going to lose all of our money. But what we really wanted to do by creating this portfolio was to demonstrate to everyone that watches our channel that any time is a good time to invest. If you can get your money in, and if you're thinking about investing long term, get that money in and begin investing. And so that's why we created this portfolio. We wanted to show what happens when the market crashes, and even if it goes lower, how you can invest in the performance of your portfolio during those times.
So in other words, it's not about timing the market, it's about time in the market. You see, when we were on our financial independence journey, we had an investment plan in place. And so every time we had a dollar available to invest in the stock market, we put it in as soon as possible because we wanted to have those dollars work for us as soon as possible. So the longer your money is in the market, the higher chances that you will get a return on that dollar.
So before we go any further, if you guys are new to this series, or if you're new to this entire channel, our channel is all about making money, saving money, and investing money on the road to financial independence. Aman and I pursued financial independence for 8 years. We reached financial independence, so we were able to quit our government jobs and retire early before the age of 40. So if you are interested in learning more about saving, making, or investing money, make sure you subscribe to our channel and follow us on Instagram.
So without further delay, let's get into our portfolio and start talking about the performance of our investments. And so the first investment that we did in this portfolio was in FZROX.
So FZROX is Fidelity's Zero Total Market Index Fund, which means that FZROX essentially invests in the same companies that make up the companies in the US stock market. So if you want to own companies like Apple, Tesla, Nike, whatever those large companies that you like, instead of purchasing them individually, you can buy them as an index fund. So a total stock market index fund will own all of those large companies, but also the mid cap and the small cap companies as well. So because FZROX tracks the total stock market, that is ultimate diversification for us. Now, if you've watched our channel, you know we love index funds. We love to invest in ETFs, much more so than those individual stocks. Because when you're investing in individual stocks, you have less diversification. So if one company drops in value significantly, that can really impact your portfolio. But by investing in an index fund that has so many different companies that's within that index fund, if a couple companies go bad, bad, even if hundreds of companies go bad, you have hundreds and hundreds more of other companies that can do well and that can still result in a really great performance in your portfolio.
So let's talk more about FZROX. This fund was created in 2018. It has a zero expense ratio, which is very rare with other brokerage companies. And there is no minimum amount of money to invest with this index fund. This means you can begin investing in FZROX with as little as $1.
So let's talk about the performance of our investment with FZROX. So in March of 2020, we invested $3,000 into FZROX and bought 349.243 shares at $8.59 a share. We continued to invest $720 in FZROX each month. And in March of 2021, we hit our 1-year mark of investing in FZROX. We invested $720 and we bought 49.827 shares at $14.45 each. We now own a total of 1,078.73 shares that we purchased at an average price of $10.94 per share. Our total amount invested is $11,797.32. Our investment in FZROX has grown to $15,468.98. That is a total gain of $3,671.66, or 31.12%.
Wow, 31%. That is an amazing return. We weren't even expecting that type of return, so it is a pleasant surprise. But let's get into our next index fund that we invested in, and that is Fidelity's Zero International Index Fund.
So this fund is called FZILX, and the focus of this index fund is on foreign or international companies. So you're gonna see those big names like Alibaba, Samsung, Nestle, Toyota, and because it's an index fund, you get to own multiple international companies all at once. So the reason why we invested in this particular index fund is because, again, diversification. But it's not just diversification in the companies that it owns, it's geographical diversification as well.
So a little bit more about FZILX. This fund was created in 2018. It has an expense ratio of 0 also. Again, this is very rare at brokerage companies. And there is no minimum amount of money to invest in this index fund. I'm gonna let that marinate for a minute because for a lot of people, their biggest challenge is having enough money to invest in an index fund. And the last two index funds that we've talked about, there is no minimum to invest.
So let's talk about performance. So in March of 2020, we invested $1,000 into FZILX and we bought 128.535 shares at $7.78 a share. So we continued to invest $240 in FZILX each month. And in March of 2021, we hit our 1-year mark of investing in this index fund. We invested $240 and we bought 20.168 shares at $11.90. We now own a total of 417.962 shares that we purchased at an average price of $9.43 per share. Our total amount invested is $3,941.82. Our investment in FZILX has grown to $4,927.77. That is a gain of $985.95, or 25.01%.
I mean, I can do 25%. That's good. It didn't do as good as the US total stock market, but the international fund did quite well. 25% is amazing. Now, let's talk about our third index fund in this portfolio, and it is Fidelity's Real Estate Index Fund, FSRNX.
So the focus of this particular index fund, as its name suggests, is focused on real estate. So it primarily invests in REITs and then also other real estate related investments. So this particular index fund has a lot less holdings than our other two index funds. For FZILX, it only invests in a little over 170 different holdings. But it's important to keep in mind that many of those holdings are REITs. So in our opinion, it gives us a lot of diversification, especially as it relates to real estate.
So we invested in this particular index fund for 3 reasons. One, because when you invest in real estate and in REITs, it is a hedge against inflation. You see, as prices go up, so does the price of real estate and rent. And so that's why we like to have a little bit of money in real estate. And the next reason is income. And because this index fund invests in REITs, and REITs are required by law to provide a certain amount of their profits as dividend income, we have been enjoying the dividends from this index fund. And the last reason is we get the benefit of owning real estate without having to actually go out and acquire all of that real estate. We can simply, with the press of a button, by buying this index fund, we are investing in physical real estate. And we have videos on our channel about investing in REITs through ETFs and index funds and all of the many other benefits that are a part of making that type of investment. So we'll leave a link in the description so that you can check out those videos as well.
So let's go into a little bit more about FSRNX. Now, this fund was created in 2011 and it has a 0.07% expense ratio, which is actually higher than the other two expense ratios in this portfolio, which was 0%. But just like the other two index funds, FSRNX has no minimum amount of money that you need in order to get started with this particular investment. So let's talk about performance. In March of 2020, we invested $1,000 into FSRNX and bought 88.417 shares at $11.31 a share. So we continued to invest $240 in FSRNX each month. And in March of 2021, we hit that 1-year mark of investing. So we invested the $240 and we bought 15.028 shares at $15.97. We now own a total of 303.562 shares that we purchased at an average price of $13.10 per share. Our total amount invested is $3,978.09, and our investment in FSRNX has grown to $4,805.38. So that is a gain of $827.29 or 20.79%. So overall, our portfolio is valued at $25,202.13. So that is up $5,484.90 or 27.82%. So 27.82% over this past year. We really think that is a phenomenal return on these three investments in our portfolio. Now, there may be some of you that are watching this that are remembering that, like we said, we began investing in March of 2020 when there was a huge crash in the market. So you may be thinking, well, that's the only reason why you have this significant return. But remember, when we invested in March of 2020, we did not know how the stock market was going to perform. And we had a lot of naysayers out there that said we should not be investing at that point. Now we're at all-time highs, and there may be other naysayers that are saying now is not the time to begin investing because it's too high. These types of naysayers exist at each spectrum of investing. But for us, we've always practiced consistency, and we will continue to practice consistency. With this investment portfolio, we will continue to invest each month. We will continue to open up our portfolio and share it with you, and share with you how it's been performing. And we hope that it will help to educate you on investing so that you can look at your investment style and really see what works for you. So if you like this video, make sure you give us a thumbs up, subscribe to our channel, and
join the journey.